How is the fund positioned for 2021? And what changes have you made to the portfolio to position for an economic recovery?
In terms of positioning for 2021, the fund is roughly sticking with a number of the key areas of interest that worked well for us in 2020. And so I think the key message we want to provide to investors is that we think the habits that were formed through 2020 and through COVID will stick for 2021. So in terms of our digital areas of disruption like e-commerce or digital enterprise cloud computing or digital advertising or digital payments, we think the acceleration that they saw in 2020 will continue into 2021. And this is something that we very strongly believe in, and ultimately our goal there is to continue to find the new winners. Beyond that, the changes that we have made are really to tilt a little bit more cyclically and to move things like climate to our number one area of interest. So here what we're saying is there's a new S-curve beginning. It is the decarbonisation of the planet. And these are our climate stocks. They make up nearly 18% of the fund today across 8 holdings. And so from that point of view, we see this as the next big emerging area to look for in 2021 and beyond. And the last thing we've done just in terms of repositioning the portfolio is we have lifted semiconductors a little bit. High performance computing and connectivity combined moved to nearly 20% of the fund today. And this really is to benefit from the structural growth in semiconductors, but also the cyclical tailwind that we expect to come through in 2021. And the last thing just to leave investors with when we show this slide, and we do show it in every month and every quarterly, is ultimately what we're saying here is these are the areas of interest where we see strong structural growth in the years ahead. That strong structural growth should equal strong earnings growth. And ultimately, we expect these companies to follow their earnings growth. And while we understand there are rotations and other things going on, ultimately our goal here is to stick to our knitting and keep working towards trying to find those very few winners.
Digital companies appear to still make up a large part of the portfolio. How do you see these companies performing once COVID has passed?
So investors might be a little surprised that we are sticking to our digital winners once COVID has passed. But as I said earlier, we do think the habits will stick. And ultimately, we do see more and more winners emerging here. And we do think it is a very exciting area. And so just as way of insight, the lessons from history that we've had, we often show this S-curve slide. This S-curve slide we often show is like the adoption of smartphones over time and how that drove the Apple share price. But what we've learned in the last couple of years is this was the slide that ultimately caused us to sell our Apple in 2017. We made a good 700% on Apple, but we missed out on the last 130%. And what we've seen with a company like Apple is it's ultimately broken out of its TAM. It's broken out from being a consumer device company into effectively a cloud, payments, and app store service revenue company, or a recurring revenue company. And so what's interesting when we look at technology today, we see a very similar thing happening. When we look at the S-curves that we've been following for a long time, not only do those S-curves accelerate through 2020 because of COVID, we expect that acceleration to stick. So e-commerce gains that we saw in 2020 should obviously continue into 2021-22. Cloud computing acceleration that we saw through 2020 should obviously continue into the future. And if we look at these big companies that are in these spaces, they're also breaking out of their TAMs. So PayPal and digital payments is ultimately moving into cryptocurrencies. Amazon is moving into pharmaceuticals and healthcare. Facebook is moving into e-commerce. And so from that point of view, we like these big companies because we see similar characteristics to Apple. They're breaking out of their TAMs. But ultimately, we also think the next generation is coming through. Because what we know is that Moore's Law will continue. And we know that if Moore's Law continues and computers get faster, then ultimately disruption could continue. And while I know a lot of people are focused on the cyclical or the value rotation, all the drivers that have driven our performance to date are still in place today. And if anything, they're accelerating because of the acceleration of compute power. And so the interesting thing that we wanted to, I suppose the analogy we wanted to flag to investors today is to start thinking about the next generation. And the analogy we're going to show you here is the Australian Open. So here we are in Melbourne. It's mid-January. The Australian Open is about to begin. And the Australian Open is something we play here in Melbourne Park. And so from that point of view, for years now, we've had the big four tennis players in Federer, Djokovic, Nadal, and Murray. And that big four have been winners for a long time, but they are slowly coming to the end. And it's very similar in technology. The big four have done very, very well. They've driven our performance for a strong period of time. But we now need to start thinking about the next generation. And we've even put a little hashtag on there for you. The next generation are coming through. And so our job as your global growth investor is not really to sit here and think about the rotations in markets, overweight this, underweight that. Our job is actually to look at this next generation and try and find those few winners. And these are some things that we're going to be talking about during the year. The companies that right now have a market cap well below $100 billion, but ultimately are addressing a market well over the size of that and can ultimately be very good. The last thing that we would flag is that because they have a small market cap and a huge opportunity, they are expensive. These stocks are expensive. They don't make up our whole portfolio, but they do make up a portion of our portfolio. And so from that point of view, it's our job to find these companies and to be prepared to take that valuation stretch, to basically take that longer term view because they are unique. And it is those unique digital or unique next group of next generation digital winners that we're looking for here, as both COVID has accelerated digitalization, and on top of that, Moore's Law is accelerating disruption. And so from that point of view, that's what we're looking to do in those digital areas today.